Ladies and gentlemen, welcome back to Vietnam Stock Market's Opportunities. It's an honor to be with you today, and if you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com, Telegram, Vietnamstockmarket.entry, with the phone number is +8491 432 6556. Or you can also scan the two QR codes on the screen so that we can support you. And the other way to contact with us is please follow and subscribe to channel name Areca Capital Channel. The owner of this YouTube channel is Areca Hong Nguyen. She is a personal financial advisor and a Viet Capital Securities Stockbroker Manager. You can contact her with the email home.nguyen@vcsc.com.vn with the phone number is +8491 432 6556. We always welcome you to our office on the 11th floor, 119 Street on Kim District, Hà Nội, Vietnam. And today I would like to introduce you about TPB. Founded in 2008, TP Bank is the second smallest bank in our coverage universe in terms of total assets and the smallest in terms of network size as of December 31st, 2021. TPB's strategy focuses on digital banking. The bank was listed on Ho Chi Minh Stock Exchange on April 19, 2018. This is the report which was collated by Viet Capital Securities about TP Bank on the 7th December 2022, with the current price is 21,600 Vietnam dong. Target price 28,100 Vietnam dong. Last target price 38,800 Vietnam dong. Higher credit costs to pressure earnings. We lowered our target price by 27.6% to 28,100 Vietnam dong per share, but maintain our buy rating for TPB. Our lower target price is mainly due to one, decreasing our projection for aggregate 2022 to 2026 forward net profits after tax by 20.9%, and two, increasing our cost of equity from 13% to 14.6%, the combination of which leads to our lower target PB multiple for TPB of 1.10 times to 1.55 times as previously. We reduced our 2022 forward net profits after tax by 13.8% compared to our previous forecast because of one, a 5.2% decrease in net interest income, following a 19 basis point decline in 2022 forward net interest margin. Two, a 10.9% decrease in net other interest income, with the main contributions being lower forecasts for trading foreign exchange income and trading securities income. And three, a 2.8% increase in provision expenses. We cut our forecast for 2022 forward credit growth by 2.4 PPTS from 17% to 14.6%, and cut 2023 forward credit growth by 4 PPTS from 18.2% to 14.2%. TPB enjoyed relatively high credit growth at 33.1% CAGR in 2013 to 2021. However, the SBV has prioritized credit quota in 2022 for one, banks that rescue zero-down banks, and two, the manufacturing segments. Downside risks: one, TPB fails to obtain a high credit quota, growth quota. Two, higher than expected NPLs and write-offs over gross loans. TPB has the highest portion of corporate loans of over total credit exposure in our coverage universe, as well as a high proportion of loans to developers. As of Q3 2022, corporate bonds accounted for 12.5% of TPB's total credit exposure. Additionally, loans to the real estate development and construction segments accounted for 6.1% to 6% as of total customer loans, respectively. We see potential risks for TPB's NPL ratio to increase and lower income from trading investment securities due to one, new developments following Decree 65, two, higher interest rates, three, limited room for credit growth, and four, weak retail investors' sentiments for corporate bonds. In Q3 2022, TPB completely stopped trading investment securities and booked nearly 1 trillion Vietnam dong of write-offs on corporate bonds. We increased our forecast for TPB's 2022 forwards and 2023 forwards NPL ratios rose up to 2.18% and 2.75% respectively. We forecast net interest margin to decrease in 2022 forwards and 2023 forwards. Factors currently waiting on net interest margin deterioration include one, a lower corporate bond balance. We forecast corporate bonds will account for 11.9% of TPB's total credit exposure in 2022 forwards and 9.4% in 2023 forwards. And two, TPB is selling most of its high-yielding government bonds in H1 2022. There were also a 25 basis points Q-on-Q decrease in the COP 1 yield in Q3 2022 and a cumulative 200 basis points increase in policy rates in September and October 2022. TP Bank continues to outperform peers in acquiring new customers. TPB had 6.8 million customers as of 11 months 2022, more than 38% compared to 2021, most of which are retail customers. In 9 months 2022, TPB had the highest deposit growth, 16.6% in our coverage universe. These factors should aid TPB's CASA drive and improve its IEA yield as the portion of retail lending to total loans increases. And now, let's take a look and I will show you the key figures of TP Bank. Figure 1, net interest margin and net interest income. The period of 2019 to 2024 forwards. TOI components. Figure 3, OPEX, provision expenses, and PBT as percent of TOI. Figure 4, net interest and net profits after tax and net profits after tax growth. Figure 5, lending market share in our coverage universe. Figure 6, RWAS as percent of total assets. Figure 7, NPL ratio annualized write-offs over gross loans and LLR of banks under coverage. Figure 8, interest earnings asset yield of banks under VCSC's coverage, 9 months 2022. And now let's go on to the valuation. We utilize two valuation methods to derive our estimated target price for end 2023. One, the residual income method with a 50% weighting, and two, PB approach with a 50% weighting. We decreased our target price by 27.6% to 28,100 Vietnam dong per share, mainly due to a lower valuation produced by both the residual income and targets PB approaches that is derived from one, a 20.9% decrease in our projections for aggregate 2022 to 2026 forward net profits after tax. Two, an increase in cost of equity from 30% to 14.6% as we increase our market risk premium by 1 ppt and apply a better of 1.07. And three, lowering our target PB multiple from 1.55 times to 1.10 times following the uncertainty surrounding the real estate and corporate bond markets. Lower projected ROEs and higher cost of equity. Our lower bottom line forecasts for 2022 to 2026 forwards are mainly derived from one, a 10.9% aggregate decrease in net interest income following a downward revision in our assumption for average net interest margin from 4.42% to 4.31%, and two, a 26.6% aggregate increase in provision expenses, which are partly offset by a 26.1% aggregate increase in our operating income, mainly from recoveries of written off bad debts. Here, now evaluation summary. History of recommendations. Figure 10, historical VCNC target price compared to share price. Closing price and target price. Financial statements. Yeah, and that brings me to the end of my presentation about TP Bank. Hope this video and some information as mentioned above will be useful for you. And if you want to open a legal trading account, don't hesitate to contact us with the information on the screen so that we can support you. Like, subscribe our channel, and share this video to everyone to know more about us. And see ya!